Hello, hello. Welcome to my office hours. I am Crystal L. Gunn, your financial strategist and small business coach. Um, Part of that strategist work is to help you realize what no longer serves you so that you can release it and soar. I also help you to have some aha moments, right? Some self-discovery moments, because that's really where the breakthroughs happen and where we can start to have aha moments. So, also showing you some things that no longer serve you so that you can release all of that and soar. That's where the magic happens, be it in your personal side or your business. I also work with you to bring you tools, resources, ideas that you may not have known about before, right? Helping you to create strategy, helping you to see things in a different light. So, all of that is what I do. And I absolutely love, love, love that. So, it's Life Insurance Month, Life Insurance Awareness Month. And all of this month, I'll be talking about life insurance. All of last month, I talked about life insurance as well. I started August with talking about misconceptions. So the first couple of weeks was all about misconceptions because there's so many misconceptions when it comes to life insurance. Go back and watch those episodes. And I stress every day for people to go back and watch those episodes because they're misconceptions that you have. I run into it all of the time when I'm having conversations with individuals. So go back and watch those episodes so that you can clear up those misconceptions that you may have so that you can move forward and use this very, very powerful and much needed tool. After misconceptions, I just started talking about different ways that you can use life insurance, because one of the other things that I've learned over the years when talking to people about life insurance is, I'll say a certain thing and they'll be like, I never thought of it that way. Or I never knew that you could use life insurance this way, or I didn't know that this was a thing. So again, trying to bring you information that you may not necessarily have known about, or the depths of a thing. Everybody knows that life insurance is out there, but the ways to use it, you may not be clear on all of the different ways that you can use life insurance. And so this week I started talking about, just yesterday, I started talking about things to consider when you talk about getting life insurance, right? Because again, it's so much more than just that death benefit that's associated to it. So things that you need to consider when you go about getting life insurance. So let's get to more things to consider. Age, health, and length of coverage. So let's talk about age and health first, because life insurance premiums are largely determined by your age and your health. So the younger and healthier you are, the lower the premium will be. And the reason behind that is because life insurance companies assess risk, and young people are statistically less likely to pass away soon. Health is another major factor. Again, looking at the risk, people in good health tend to pay less because they are considered lower risk. Waiting to buy life insurance can result in higher premiums as you age or if your health declines. I literally talk to people every single day who need life insurance for their older parent. Their older parent is not in good health, right? So the premiums are high. So we wind up talking about, well, what is the basic piece that you need? Like, what is it that you need? I have someone right now who their father has no insurance and he's in failing health, right? And so her major point is trying to get just some burial coverage, right? So it's important to get insurance early. So when you get that life insurance earlier, it allows you to lock in premiums at a lower rate, which can save you thousands of dollars over the life of a policy. For example, a 30-year-old in good health may pay significantly less for the same coverage than a 60-year-old, or even a 30-year-old in bad health. So if you're young and considering starting a family or securing financial protection for your loved ones, or you may not even have a family yet, purchasing life insurance now ensures that you pay less over time. And it guarantees that coverage is in place as your needs already grow, right? This is also the reason why I talk to people with children under 18, encouraging them to get policies for those children, those permanent policies that will build cash value. You're able to lock in really, really great premiums. Plus, it's a built in savings account if you need. It's building cash value that they can withdraw or borrow against in later years. And I'm not necessarily talking about when they're in retirement years. I'm talking about, if you start with your kid and, age 5, it's a significant amount of money for them to pull out at age 20, 21, depending upon what your premium is and what you're adding to that value. So you are setting your children up for great success and a really low premium amount on their life insurance policy. Okay. The other thing is length of coverage. So understanding, and let's just talk about if it's term coverage, because permanent policies don't expire, but sometimes term policies make sense, right? Remember when we're talking and we're having that strategy consultation about what type of policies work for you. And because again, this is not a cookie cutter thing. You need what you need based off of what you need, right? Your sister, brother, cousin, coworker is going to need what they need based off of what they need, right? So somebody may say, well, all you need is this. Well, they're basing it off of what they need. But what is it that you need? And I'll give you an example, right? I have a client who has a daughter with special needs. She has 2 siblings, and she has a sister who lives out of state. And she's like, I know my sister would take care of my daughter. Absolutely. But there becomes an extra financial expense to take care of a child without special needs, but then you have one with special needs. That person that will take on raising your child or taking care of your child, because this person will need some sort of assistance throughout life, right? That extra money is going to wind up being really, really helpful, not only for your child, but the person that would take care of them. Now, it's also for just regular, not regular, but children without any special needs, right? If someone's taking your 2 or 3 kids, I have another client whose mother actually died, and she had younger siblings like 10 and 14 that now she's taking care of along with the 2 children that she had. So now she went from having 2 kids to 4 kids, right? Mom didn't have any coverage though. So now all of that responsibility lands on this young woman, right? So understanding what type of policies you need. But for the sake of this conversation, let's just talk about term policies. So it's important to have the discussion so that you know what type of term length you should have. So if you're talking about term policies and common term lengths, 10, 20, 30 years, and this decision will depend on your financial obligations. For example, if you have a mortgage that will be paid off in 20 years, or plan to raise children that are financially independent in 50 or they're financially independent in 15 years, you may select a term length that covers those specific milestones. And remember, based off your needs, it might be. So for the lady who had has the child who's special needs, like her child is like 17, 18. And so she is, late 40s. It was cost prohibitive for her based on her budget to get a permanent policy for herself that would build cash value and right for the amount that she would need. So for a very reasonable amount, we were able to get a really nice size term policy, right, for her. And when she goes back to work, she was like, well, then I will work on a permanent policy because she also wants to be able to, she's going back to work this month. So she also wants to be able to use a permanent policy in order to be able to build some cash value for herself. So again, that strategy is what we do in that consultation. So length of term matters if you're doing that term policy because you want to match the term length to the significant life event. Does that make sense? That helps to ensure the family is protected during the years when they're most financially vulnerable. After these financial obligations have been met, such as your mortgage being paid off, right? That term policy might not be important to you before. So I'm a component of you get a mortgage, you get a 30-year term policy. Why? Because term policies typically are more inexpensive and you get it just for the amount of that. Now, let's say house is paid off and that term policy is still in effect and something happens to you. Well, that's extra that goes to your family, but you want to make sure that that asset is covered. Term life might not be the policy you need, but you may also need a permanent policy with it. So again, that discussion, because there's nothing cookie cutter about estate planning and life insurance need. The strategy is based solely off of your financial needs and goals. So remember, your age, health, and desired term length or policy type are crucial in making sure that you get the right coverage at an affordable price and for the appropriate duration. So do me a favor. Think about your family and the needs. Do you have children or grandchildren? Do you have a mortgage or any other major debt that you would want paid off if something happened to you? What is that? What is your current age and your current health rating? Most importantly, how do you want to take care of your family and yourself now, later in life, and when you're no longer here? Let's talk about it. Remember, life insurance is a necessity and it is a great tool. And when I talk about getting your financial house in order, life insurance is definitely a part of that. Leaving your loved ones without income or trying to figure out how to pay for your funeral, your long-term care, pay off this mortgage, any of that is irresponsible. Leaving them to figure that out is absolutely, positively irresponsible. So when you talk about you love your family or you love your children, the least you can do is have adequate life insurance coverage. Okay, so let's get on to what my favorite thing is. It's life insurance. Again, there's no surprise this month. And just spoiler alert, it's going to be my favorite thing for the rest of the month, right? So what do you want to do? We want to complete the life insurance calculator to see how much coverage you need. But do me a favor, again, before you even do the life insurance calculator, think about and write down how much coverage do you think you need. Even having listened to what I said today, and if you watched any of these past videos on life insurance, how much do you think you need today? And then write down how much do you have, and then do the life insurance calculator to see how much coverage the calculator says you need. And then look at the difference, right? Where's the gap? Schedule your free consultation with me. Let's discuss the options and then let's fill the gaps, right? It's no reason. There's so many options out there. It's no reason for you to be underinsured. It's just not. The only reason that you're going to stay underinsured is if you don't do the work to get where you need to be. So if this information has been helpful, please subscribe to the channel and share this information. Part of the reason that I do what I do is so that the people that hear me, the people that come in contact with the people that hear me, right, can get the stuff that they need in place so that they can get their financial house in order. Yes, I'm extremely passionate about it because some things are so easy to put in place. You just need to move forward. You just need to work on it. So share this channel with anybody you know. Don't be a gatekeeper. You never know what somebody is looking for. You never know what somebody has been praying for. You never know what somebody is in need of. Be that blessing to somebody else, right? And remember to always, always give yourself some grace. Give yourself some grace for what you didn't do yesterday, what you didn't know yesterday, what mistakes that you made yesterday. And again, this is in every area of your life. I just lead with finances. What you cannot do is keep giving yourself some grace because you've gotten the information and you've done nothing. Don't give yourself grace for that, because now you need to move. But keep striving. Keep striving for your next level. Never give up on you. And always, always invest in you. I promise you, it's the best investment that you will ever make. You will never, ever regret it. Thank you for joining me today for another office hours training. Have a fantastic day, and I will see you on the other side. Thank you for watching. I appreciate your time. Be sure to join me for the private online Q&A immediately following. The link is in the description. And if you haven't done so already, please be sure to subscribe to my channel and turn notifications on so you never miss this opportunity. Thank you again, and I will see you on the other side.